Welcome back. It's time now to take a look at the top business stories. Etisalat and Do test shared networks. Asian Islamic financial institutions encouraging more female scholars to work within the Islamic financial industry. And we talk to Dubai Duty Free about what lies ahead in 2011. The GCC markets ended mixed today and the UAE bourses ended positive. The DFM fell over 0.25% to close at 1,663 points. The banking sector posted a loss today as Dubai Islamic Bank fell nearly 1% and Emirates MBD dropped 6%. Do rose nearly 0.75% and Drake & Skull International posted a loss of nearly 1% after soaring to a 15-month high in yesterday's trading, gaining nearly 6%. 120 million shares were traded, valued at 167 million dirhams. And over in the capital, the ADX gained nearly 0.5% to close at 2,752 points. In the banking sector, Abu Dhabi Commercial Bank rose nearly 2%. Abu Dhabi Islamic Bank fell 1%, while RAK Bank gained over 2.5%. The energy sector posted gains as Dana Gas rose over 4% and TAQA was up nearly 0.75%. Etisalat rose nearly 0.5%. 59 million shares were traded, valued at 77 million dirhams. Etisalat and Do have begun to test their shared networks, having discussed gaining access to each other's television and internet broadband networks last year in a bid to boost competition within the sector. Engineers are currently testing technological components for the network, convergence, and the deal is still awaiting approval from the TRA, where both operators will be able to gain access within each other's territories. Etisalat has the dominant market share for cable and television services across the UAE, while Do covers a small area of Dubai. Experts have said this new introduction would drive prices for telecom services down, as competition would force operators to increase promotions to attract new customers. Female Sharia scholars are seeing the gender gap within the workforce shrink, with an increase in females being appointed in crucial positions within the Islamic finance sector. Asian Islamic financial institutions are encouraging more female executives and scholars to fill a shortage of talent, to help meet the demand for experts within the industry, and to set an example for companies in the Middle East. It's estimated that the Islamic finance industry has been growing 20% annually since 2000, with assets exceeding $1 trillion. Now, banks are expected to ease up on their lending procedures to SME this year. But to see this change, financial experts say companies must shape up on their financial reporting. A study conducted last year involved 1,000 companies across key sectors, as well as 20 leading banks in the country, revealing the weaknesses of the industry and what can be done to improve on it. Khadija Saleh reports.
SMEs make up more than 98% of the business industry in the UAE and are considered the backbone of the country's economy. Despite these, experts say SMEs often find it difficult to get business loans approved from banks.
Any business segment, be it electronics, textiles, or food stuff, somebody would fail, default, run away. The banks would take a view that the entire segment of that business is bad. So they'll try and pull out from there, which will put everybody into the trouble. IFRS and similar accounting procedures, when they are adopted, the banks will have a comfort level that there's right reporting and they can understand a client of theirs on individual basis.
According to a study conducted by Jitendra Chartered Accountants, most SMEs suffer from a lack of accounting and auditing procedures that provide sufficient data. This vital information could reduce an interest rate on a business loan from 24% down to 10%.
In UAE, there's no accounting body. It is a need of the hour that all the accountants and accounting professional people like us, they should be brought under the umbrella of accounting body.
And while there is still a need for a regulating body for accountants in the UAE, a simplified guideline for SMEs has been released. It hopes to keep companies on the right track.
Mainly we are distributing in free zones and in the many business organization where we are member, and we are very soon we are going to advertise in the newspapers for complimentary copy. This year we have decided to diversify into and form an educational institute, and our job is to train the accounting firms here, accountants and banks as well.
With the launch of the simplified guidebook, financial and banking experts hope SMEs in the country will adopt a culture of better transparency and accounting procedures to open doors for more opportunities. Khadija Sali, 7 National News.
And for a detailed market analysis, we're now joined by Anil Sachdev, futures dealer at ACM Middle East GMCC. Welcome to the show again, Anil.
Thank you for having me.
Now, Chinese PMI manufacturing numbers showed a decline following last month's tightening policy measures. Tell us a little bit more about this, and how have Asian markets been reacting to the possible rise in jobs in the US for the month of December?
Well, the news started with China releasing its manufacturing news, which showed a decline to 53.9 from the last month's 55.2 levels. And we saw its effect today, where markets were positive in Asia because of this news, which saw that this news could help the economy to control its inflation levels. And also on reports that US will release its non-farm payroll data on Friday, which will show a rise of 140,000 jobs in the US for the month of December. This has seen some positive movements in the dollar currency as well as the Asian markets. Markets in Japan, China, New Zealand, Australia were closed, but Hong Kong market, the Hang Seng, saw a rise of 1.75% rise, and the MSCI Asia Pacific Index, except for the Japan Index, rose to a 2.5-year high. Now we are seeing that there could be two things. One, that Chinese inflation could slow down because of the lower manufacturing news, which is positive for the economy. On the other hand, we will see that there is a possible chance of the Asian region slowing down a bit because Chinese economy could slow down with lower manufacturing and factory output levels. So we are waiting to see the effect on the coming days and how the Chinese news could show an impact on the region.
Right, so moving on to the euro, Spain and Italy must refinance 400 billion euros worth of bonds. How is this going to affect the euro, and what's the US dollar doing at the moment?
Euro was trading at higher 134.15 levels early in the morning and late on Friday. But today we are seeing that the euro dropped to 132.50 levels because there are concerns that Spain and Italy will have to refinance the 400 billion euro debt. Now this, if they fail to refinance it, we could see another big European crisis in the making by around Q2 2011, and there is a possible chance of the euro breaking up. But Germany and France have shown positive support to the euro, saying that they will not want the euro breaking up, and they said that euro breakup could lead to a breakup of the European economy. We are seeing that euro currency has started to move up slightly to 133.15 levels. The reason being that European markets started moving up after profit speculation and the US economy improving this year, starting with the job report coming up on Friday, and today's manufacturing data has shown some positive movements in the markets.
And over to commodities, oil moved in to close the 27-month high, while gold moved to new highs of $1,421.
Oil moved up to 27 high of 92.10 levels. This is the highest since October 7, 2008. The reason being, first we saw that US manufacturing data expected to rise to 57 levels from previous month's 56.6, which is the fastest expansion in 7 months. And also the expectations for service sector to rise to the fastest pace since May 2006. This added with cold weather in Europe and US, leading to demand of heating oil, and also refiners in the US dumped excess stocks of oil last month because they wanted to avoid year-end tax liabilities, which is again pushing the oil prices up towards 94 levels. Gold moved up to 1421 highs because of the crisis generating in Europe. And we haven't seen any clear signs of the crisis to evade. So investors are putting the money into the metal as a way of wealth preservation, and we could see the gold moving up to 1431 levels, which is the current record, and support is strongly at 1400 levels. This week we could see a lot of data from Europe coming in after the last month was quiet because of the holiday season. And the important news would be the unemployment news from US, which could see 9.7% rate. And other news, and the FMC meeting news from the US regarding the last month's interest rate decision meetings by the Fed.
Well, thank you very much, Anil. We'll see you in a couple of weeks. Now over to our fast financial news. Jewelers in the UAE expect gold sales to grow by as much as 20% in the year ahead, with the price of the precious metal hitting an all-time high last month and predicted to rise even further. Jewelers are hoping to see a much-needed increase in sales from 2010, despite growth in sales of 15% from the year before. And a $1 billion gas project is planned to begin this year, the start of many expected industrial projects to come into fruition across the capital. Gasco awarded contracts to build Habsham Sulphur Station and the Ruwais Handling Terminal, employing approximately 5,000 workers during the peak of construction. And after the break, we speak to George Horan, the Deputy Managing Director of Dubai Duty Free, about what lies ahead for the single largest retail operation in the world.